The last time I was up in Chicago, it was right before I moved down here to Austin, and not podcast appropriate what we did before, but we went to this bar and it was like from like 2:30 to 5 a.m. and then it was like, all right. And then I had to get up for a skate contest in the morning, which was fucked, dude. I skated through like 6 miles to downtown Chicago trying to get to this park. It was comedy. Dude, I was so fucked up and so lost in the morning. And it was out by the water, so it was a fucking disaster, dude. The other guys saw me fucking skating up and were like, what the fuck did you guys do last night? One guy never made it.
That was me on Saturday for golf. I was telling you, like Friday night, my boy's in town. First time he's been in town in a while. And not that we were trying to like relive what we did in our 20s, but I usually don't mix like booze and stuff. Man, we were mixing everything. Our thing that we do is car bombs, right? So we do a lot of Irish car bombs. We hadn't had one of those in a while. So I was drinking like these raspberry wheat ales. Then next, we're taking a shot of tequila. Then it's we haven't had a car bomb. Let's do that. So we're doing car bombs. And then it's like, I bought you a neutral. And I'm like, I don't know if you know what neutrals are. It's just like vodka seltzers, like a high noon. And I'm like, why? I'm drinking beer. I don't need to mix the beer with Guinness, with tequila, with vodka, with all of this. And then we did, dude. And I missed on, and we had a fucking tea time on Saturday morning. And I couldn't make it.
Did you actually make it? No, I was going to say.
For the first time ever, I've played hungover. I've played with a lack of sleep after playing, because I used to play hockey on Friday nights. So I've played like lack of sleep, right? I couldn't walk. I've never been that crippled in the morning from drinking since probably college. Because I don't really drink that much, right? That's the thing now. So my body couldn't handle it. I was sweating. I was profusely throwing up, and it was, it wasn't pretty, I'll tell you that. All right, what's going on, everyone, and welcome to another episode of the Market Misfits podcast. I'm your host, Joe Poke Shiva, joined by my esteemed colleague and friend, Smiddy. As always, how are you doing, brother?
Esteemed, what a compliment, man. What a compliment. I appreciate that.
I'm getting better at giving you the respect you deserve instead of shitting on you every chance I can.
Yeah, you get some of that.
But also,
life, right?
Fuck you.
Yeah, there we go. There it is.
Like we had this conversation, I think, in the room
of the steam room.
Exactly. I think that's the funniest part that we talk about in the room. And I'm always sitting there. I'm like, when you get really soft individuals, I'm just like, you guys wouldn't last 10 seconds in a group chat that I'm in. Like, if you're not ribbing your buddies, then like, are you really like that close? Like, that's kind of what it is. But anyways, today
you get banned from the group chat.
And then you get removed. So we do that to fuck
banned
people
from the group chat.
Well, we'll be in there and we'll remove someone and they say something stupid, and then like we'll add them back like 10 minutes later just to screw with them. But today is June 10th. We are recording, I wouldn't say late, but we had a special podcast episode last week, and I didn't want to like do 2 in a row on the same week with Charlie and Marsh, which was such a good listen, dude. I don't think people really understood how deep Marsh can get. You and I have unique perspectives because we've been and done small groups with him before, but that was some powerful stuff, dude. Like them two can talk about that shit for hours. That is not my forte. That's why I was like, Charlie, you have to do the interview. You're going to get more out of him than I can. I know where my limitations lie. But yeah, that was good. If you haven't listened to it, check out the last episode. It was awesome.
Yep, it's good stuff, man. Marsh is he's an interesting character, especially with the experience that he brings and the almost meditative work he's done throughout his life with his crazy experiences. To bring that into the market at, I don't want to say at his age, right? Because he's still relatively young in that sense, but to be approaching the market as a new student to markets, is he has a good mindset, and it's really fun. You can always take something from him in the small groups. He'll pop in, he'll listen for a while, and then he'll pop in with a Marshism, as we call it, where it just it'll wrap a subject nice and tight into a good quote and saying. So he's got a knack for that, man. He's a very great guy, a person that I call a friend. We talk
really
about,
nice guy. We met him in Vegas last year for Traders for a Cause. He's such a great dude.
Yep. amazing photographer too. I don't know if Joe he sent you that roll from Vegas, but yeah, it's good stuff. So the next meetup, it'll be fun. He wants to bring his like cinema guy out and film and actually like have still shots and then actual live shots. So we got to get that cracking. Hopefully, Puerto Rico, maybe in the fall.
Yeah, it'd be great. Get a bunch of people out there to go mess around, and you know how Lucci is. He's a blast. But yeah. So again, it's June 10th. I'm gonna try to get this out today as well. And last time we spoke, we had Jay on the show. So Wall Street Jesus was with us. That was back on what, May 21st. So I think 21st is when we recorded the last one. And yeah, I mean, let's talk about a little bit what's been going on since then. So if I go back and I pull my chart up, we had just touched 59.75 that day before and started going in, but we were just chopping around in a pretty shitty range, and all things considered. And since then, not much else has happened except a melt up, just a melt up, slow. We did get a little bit of a dip down to 5,800 at one point, and they just fucking gapped that shit right back up the next day and just rode it higher. We've talked about this at length in previous episodes about you and I not really buying this move. And look, we'll call a spade. I mean, just wrong. Like, and I'm not saying that we're wrong in a sense. Yeah, we missed it. Like, that's the best way to put it. Like, we missed this ride up. And it wasn't that we weren't long on some of this. Like, we did get long on a lot of it. I think that we just kind of thought that at some point we would have already kind of teetered out. But with all this mechanical flow buying and all, and then eventually it's not like we're getting like a rip off of that. Like, it just slow systematic buying is just completely changed the kind of the landscape. And it still is even now. Like, these, we could call it a breather because the ranges got really tight. And, some of the shorter term sentiment comps that we use and look at, that Jay looks at, have kind of come down a little bit, before now going back up. But I thought that we'd stall out. Gem called 6,000 SPX. We've kind of now pushed ahead of that. There's some stuff to digest when it comes to what can happen next, which we will get into. But, just curious, Smiddy, like it's just been odd since Gem had that original call of 35% from peak to bottom. I mean, he was calling the peak to bottom of 35% even from the all-time high. So it still technically has more to go. His calling for it later in the year, leading into 2026. And, McElligot now has come out with a new note. He has a very similar, take, which we'll get into. But yeah, just curious on your thoughts of, what's been going on.
Yeah, I mean, it's kind of that, dude. It's the melt up, right? Today was an interesting with the range that we got from, and I trade more NASDAQ when it comes to indices than anything. But I mean, we had a nice sell-off, recovery, and then kind of stretched to the upside. So with some of the room indicators that we have, the initial balance on the steam room, we hit T1 and then we stretched up to T1 to the downside and then T1 to the upside, which is the first time that I've seen that in quite some time. So we're just hitting these extremes. The range has narrowed. And so I will say on NASDAQ, the ATR has cooled off quite a bit. I feel like, this was probably a month and a half ago, early April. Yeah. So almost 2 months ago now, ATR was at 800, 900 for the day. So you were looking at really outsized moves. It's cooled off. We're back down to 424, 425. Those are still big days. There's still big range and a lot of money to be made inside the day if you're scalping, especially. But it's cooling off. And
yeah,
we spoke about weeks ago when I was kind of stuck in cash and watching this and felt like I was really chasing a rally. It feels more so like I'm chasing that same rally that I'm like, this is kind of overdone here. But what do? Right? There's enough people on the sidelines that how do you really not, how do you not get the exposure that you need on the long side, hoping for the short side? Because we have enough people, even with structural components, right? The inflation, the employment, we've got some smart people in the room calling out and saying, hey, the internals don't look good here. The optics are fine, right? With some of the headline stuff, what we've got going on with China, if we get a good deal, that could catapult us. I really think that would be the big catalyst that catapults us to new highs. If they come out and say, and it may be bullshit, right? It could be a fake deal, right? But
Right.
they come out and say, we've reached consensus coming out of these meetings in London. I could see this pushing us to new highs across the board. Mostly because anyone who's short is going to get their pants blown off and they're going to cover.
Right.
That's kind of what I'm looking at, you know. On top of that, what we'll get into is the underlying structural and internals of where some of these vol funds are at, CTAs, etc. Where if we get some low vol, continuous low vol, we have some of that April volatility fall off. These guys are going to be triggered to buying, and we're going to have structural support. So it's tough, man. It's kind of tough out here. Like, I would like to be short, and you almost can't do it. Every dip is being bought right now, especially when it comes to indices. Every dip is pretty shallow in that sense. So how do you fit? You know, you're almost better to not fade that. It's easier to sit on the sideline and wait. You know, at a certain point, you know, I have the responsibility to the client to make sure that I produce returns for him. But it's kind of tough, man, and we're doing okay. We've definitely scratched a good bit back, so I'm content, and we can get into that later if we need to. But yeah, we're getting better over here.
Yeah, we made some good calls and some trades, which we'll get into. I want to focus a bit more on kind of what we think is happening. So it's like, you know, one thing that we pointed out before was you had vol control funds and you had CTAs and any other systemic fund really buying, right? That was the big thing. You know, that's kind of changed on different areas now. CTA, you know, flipped to being sellers. Vol control funds weren't really buying anymore. You know, there is a flip once more of this April stuff comes off again. And maybe you probably have seen it on some of the stuff from tier one, but I read this in Charlie McElligot from Nomura's note, you know, today. You know, there's potential that they have some stuff to deploy later on. But, you know, the one thing that has been really interesting is even now, nothing outside of tariff headlines or, you know, Iran nuke shit. None of this is inflation based. None of this is earnings based, in my opinion. This is still just math. Systemic math, mechanical buying. And the reason I say it too, because in Charlie McElligot pointed out in his note, which was great because I don't have this information, right? So this is new stuff, but it makes a lot of sense. We are in the 99.7 percentile on rebalancing flows and leveraged ETFs, right? So what leveraged ETFs? These are your SPXLs, your TQQs, you know, all of these 2-3x directionals, right? They have to try to keep some type of structure for daily return based on what's going on. So they're always constantly moving shit around, right? And hedging and doing whatever. Like that's how they rebalance. Now that we're at this super high level, it creates something that we call synthetic negative gamma, right? Which was really cool to read about that Charlie was saying, because I know what that is. It's just, I've never seen it on ETF rebalancing with any of these 2-3x directional bets. Like, didn't even know that. I never even paid attention to that, to be quite honest. Like, so that was cool. It's cool to see. But we're now basically, because of what is happening, if the market's going up and we go up, it's a shit ton. It's $6 billion for every 1% move in SPX that they have to do it, and they're buying with it. That's what makes it synthetic long gamma. So if SPX goes up, they're buying more futures, fuel to the fire, same vice versa on the other end. So we're in this negative thing. But what's odd, the flip side of this is, given where we're at right now, we are in a positive gamma pocket, meaning volatility is just dampening, right? So you have this interesting, pull between the two of them. And I don't know when these guys typically rebalance, like if it's end of day or how it exactly works, because it's just not something I focus on. But it was a cool, I like when he throws these cool little math things at me. I get to nerd out and be like, wow, this is cool. This is going to amplify, this is going to dampen. Now we're not going to do anything. And it just keeps going back to the same thing of we've gone fucking nowhere, right? Just slow melt up, nothing. But these ranges got super fucking tight. I mean, the 2 days yesterday, the range was abysmal, but 30, 40 points range. That's horrible. Today wasn't much better outside of a couple headlines, across the board. So, we are at that point now where people are starting to talk about a much larger move up, right? And this is where I get to go, be a nerd for a second. But everyone's been talking about this for a while, and same with, McElligot, and I'm assuming Jen's probably mentioned it. But the Payne trade, the Max Payne trade, was a V-shaped recovery, basically, right? No one was buying this shit. You've seen that, Smiddy, right? Jay talked about it all the time. It took forever for people to flip on. We were in the same boat. We were in the consensus, which we know that usually that works. When you're in the consensus, usually it doesn't happen, right? And now everyone's kind of, I think, flipped a bull again, which is better for the contrarian point of view that I would rather have, is that I think, the macro is going to end up destroying us later on this year and we're going to go back down. But beside the point. Now because people had to start chasing, they started buying long calls on the indexes across the board, and then in lots of mass quantities. So lots of gamma tied to those. Well, 95%, I believe it is most options are dealt by market makers, not individuals like you and I, especially this large size. And with June OPEX coming in, June, this is super important because June OPEX has a lot of gamma that has to come off. Right. So there's going to be a lot of repositioning and different things that happen. But in the short term, what everyone's been talking about is, are we going to get a fueled rocket ship higher once we get into those short gamma strikes? So for those that are, listening to this, right, the way that I was going to put up the graphic, but it's just probably easier to explain it. We are getting to the short gamma strikes now from like 60-50 up. So what that basically means is, even though we are in technically a positive gamma environment, this is where I get, frustrated sometimes with people, but that doesn't mean we can't go to negative. It just because there's no like legitimate gamma flip level that just sits there and now we're just in negative or in positive. Like there is, but there isn't, because you get pockets throughout the entire time you go, because gamma is most important on 0DT basis, because that's when it's the highest at the money strike closest to expiration, right? We're getting towards that as we move towards June OPEX, and we're hitting these, long gamma calls that everybody else is in, which makes the dealer short. So long way of saying, if we get to a flip, which is coming up, and there is no exact number, right? To what I have and what I see on the dealer map, it's probably like 60-40 to 60-50 is when we started getting into it. If we flip there and that goes in negative gamma, that's where you could get increased volatility, and they're going to ride even more. So think about this. This is just a scenario that might play out. And I'm going to say it to you. If we push into it, Smitty, and now we're in this negative thing, and people have to flip into whatever it is, right? Flip into, these vol control funds have to buy, or CTA systemics, leveraging, whatever it is, it doesn't matter. Or people are just buying in general. Dealers now are playing with, there is a potential to have a pretty significant accelerant to the upside, and we go back into a vol up, spot up environment, which I personally really love, because for someone that likes to trade it in very short term scalps on the indexes, like managing, different positions, you need volatility. Negative gamma is my friend. So anyways, that's the long-winded answer. I probably did a horrible job of explaining that, and I apologize, but that's where we're kind of at right now.
No, and absolutely. I mean, I was watching, a couple hours before this call, Tier 1 put out their kind of situation report for the weekend, for the day, and they kept it pretty tight. But even looking at where their dealer positioning is, SPX every 50 points from here, 60-50, 6100, 6150, 6200. Like those are the big pinpoints that we're going to have these catalysts where dealers are going to have to adjust their book. And it's going to be, like you said, vol up, spot up, where like the sky's not falling, but all the dealers are chasing. And so we as the traders, we got to figure out and make sure that we're able to, trade that environment well. And coming off of what we went through from early April, I think a lot of people are cautious, right? Everyone feels still like headline risk is what's going to push the market.
Yeah, macro.
And I don't think, right. I think the macro doom and gloom is what's got everyone wrapped up right now, which has been a big adjustment for a lot of us, again, to get used to this, single tweet headline driven market. But understanding and keeping in mind that we have this underlying factor of some of these big funds, vol controls, CTAs, those guys are going to have to, run their books the way that they do. And that's kind of what I was looking at. We're in the same boat. I sent you that text earlier saying like, it's really interesting when McElligot and the guys at Tier 1 are very much on the same page. And that's what I was hearing. I read his note from this morning and then immediately turn around, reading everything from these guys, and I'm like, shit, these are some smart folks telling us that there's a significant and definitely a high probability chance that this is the market. Everyone's going to be caught offside. I think that there's a lot of people caught offside. You definitely have some of the folks, I think we see it with the Tesla dip buyers. There are some folks who are so conditioned to buy the dip that they're not going to be fazed by this, and they're just counting their money on the way to their vacation this summer. But there's a lot of folks and a lot of smart folks who are kind of still on the sidelines and stuck thinking, is this the end of the bounce, right?
Right.
I love to look at macro. I'm a little bit more concerned with the underlying, but there's a certain point where you have to kind of throw it out, throw the baby out with the bathwater and follow price action and stop trying to outsmart what the market's giving, the opportunity the market's giving you, and trade the market in front of you, not the market you want. And I've struggled a little bit with that, to be honest with all you guys. Like it's,
Yeah, we both have. I mean, when you have, it's tough sometimes. It's always easy to say, oh, just take the contrarian point of view and you'll probably do okay. Right? Oh, buy the dip. I don't think anybody and again, people even that have been in the game longer than us, like even Jay and them, I think were a bit surprised. But again, it's all different time frames. But retail bought the dip so hard that it forced so much chasing, right? And that was a big part of it. On top of, at one point, CTAs are max short. It was like, okay, they have no more dry powder, as Jay said in the last podcast, to go any lower. They have to buy at certain points, right? And then now they have all of that short to unload to keep going long, and then add some on top of that. So, it's just, it's okay to be wrong. And I think it's important for us to be able to own up to that and be like, yeah, okay, this is what we thought. But at the end of the day, we're still trading what we see, right? We just weren't sitting there putting on long positions, right? We weren't sitting there being like, okay, I'm going to buy stock for the next year out. I mean, if you look at that one dude that bought 3 billion across the board, he was skipping 2026 completely. Goes, buying June 2027 leaps in $10 million clips. Yeah.
Right. And honestly, probably the smart play. Probably, if you think about it, grand scheme of things, yeah, you're getting a pretty good spot. They're giving you a nice entry here. I definitely think it could work out for him, Yeah. But I mean, who do we think's doing that? A guy who's running a $3 billion book, or is he running 30 billion? And he's like, yeah, I'm putting 10% to work for the next 2 years. I've got time. And he's going to go sail off into his yacht for the next few months.
Oh, of course. And we're already kind of getting it, what we've seen now. And, this thing that I was like, we're in again, they're just crushing volatility now. Gamma will play an important role in the short term, and we're in a stabilizing area, as we've talked about, till we get past a certain point and we flip. What I think will be interesting, and this is kind of, I guess, my crystal ball short-term forecast, is we might push an all-time high. I'm not going to sit here and say we will. It's not that far away, in all honesty. So it's probably a good probability we end up doing it, especially if you have all that short gamma up there and they have to chase. But that being said, is given where OPEX is at the end of this, or not, June OPEX, right? Which is a big one. And you have the JPM caller, right, that people always seem to forget about, which is they're in a short call right now from 59.05. That is something else that rolls at the end of the month. It's not necessarily tied to June OPEX, but right now we have this tight. It's like a tightening, right? Like we're tight right here. That's why we haven't moved anywhere, because of the environment that we're in. They're killing volatility. We're back in the summer of, summer. They love what people call the summer of George. I think is what Jim and them love to call, stuff like this. You get the melt higher, and then if we get past that certain gamma flip, it might get a little bit of an acceleration to the front. But when it comes back to OPEX, I would not be surprised if we're back down by the 6,000 area or less. And I don't say that for any other reason that most of the gamma is concentrated around 6,000 on both sides. And what typically happens in OPEX, things like to pin. They pin at whatever the total gamma strike is. And it happens more often than not. depending on the rebalancing. Now, the one thing about this is the positions are probably going to be adjusted the higher we go. So we saw a bigger readjustment. Shout out, Don, who actually pointed out to me there was like $1 billion of call and put flow that came into the indexes from floor traders, so obviously institutions, last week, and they were readjusting a shit ton of positions. And we're talking like deep in the money stuff. So 5,000 strike. There was a bunch of stuff that was tied into like the 59 990s, 59.95s, 6,000 and all of that, all the way up to 7. And it was just a bunch of deep, repositioning across the board as necessary because of where we're at. So, it's a long-winded way for me of saying, given where we're at, we could continue the melt up. Maybe we get an acceleration up to all-time highs, but I would guess, but by OPEX, we're back to 6,000. That's my crystal ball. That's just a gamma play. Unless things change, there's always a chance they readjust this shit. If we start getting up there. But anyways, that's just kind of what I'm looking at right now.
Yeah, I mean, and where would that put us relative to all-time highs? We're getting pretty
all-time highs. What, 61.47?
Yep, looks like it. So call it 61.50. And again, that's a few good days or a one China announcement that we get a deal and we are cracking all-time highs. And at which point, I think a lot of people are offsides. Not only retail, who wasn't just long, but now dealers are going to be scrambling, to shore up the book. So yeah, it's a 1.5%, a little more, 1.6, 100 points. That's easy. I feel like that's easy work in the grand scheme of things. We could see that in a few days.
Yeah, I mean, even if it is the melt up, the thing that makes it more probable is the short gamma strikes above. That's what makes it more probable. Because once we get past a certain level, if it's like dumping there's already a fire. We already know there is. They're going to dump fuel on it, right? The thing is I don't know if the dealers will let it happen, right? I mean, again, they're just systemically delta hedging across the board. But, that's when we start getting to a point where, things get a little bit crazy. And then we saw it kind of a little bit today. Like there's a little bit of a VVIX and VIX divergence today. I mean, VVIX was up 3.47%, while VIX was down 1.22%. Right? Usually that leads into some type of potential pullback. It's not really confirming any type of risk on. Spreads were basically unch on the day, something that we look at. I think sentiment is going to be getting closer to, higher to where it needs to be now. Like we're pushing the 60s on our own internal meter. So, I wouldn't be surprised if we get some type of, volatility event, even if it's small. But if we get some China news, that's what will set the whole thing off. That is my bet. It'll set the whole thing off, and then we'll be by OPEX back down to 6,000. So, that's what I'm playing for. I actually hope we get it because now I'm okay. Kind of, even though it sounds ridiculous, I'm not putting long-term positions on anywhere up here. This is all short-term shit. This is all I'm playing the indexes for the day or a couple days out, maybe a week out max. But once OPEX goes, that's where thick shit gets really interesting. So when this happens, that's what we call a gamma unclenching event. So now price can move freely, right? There's less dampening flows or accelerant flows into all this as positions roll out. So now you're really going to see what happens. And I hope that systemics and all that shit are no longer sitting here trying to prop crap up or, CTF, or ETF, leveraging like we talked about before, or not keeping us where they need to be and whatnot. But from a macro perspective, this is where we get some more fun shit. So we talked about this a couple episodes ago. But Gem Carson's 35% drop, and we mentioned it earlier, right? McElligot is sounding the alarm on the exact same fucking thing now, but he's not calling a percentage because he doesn't. What he is saying is the when crash crowd, which I'd put myself into right now because that's what I want. I am selfishly looking for a move really low just to make an investment for the long-term future. Like buying up here at my age sucks. It just sucks to be buying for your retirement accounts up here. It just keeps going up. It'll be fine. No, it sucks. I want a big event to come in where I can cheapen this shit for myself. That's selfish, and I'm okay with it. But what he's talking about is after OPEX, gamma unclenches is what I talked about, right? Then When CTAs or systemics are finally up on full exposure or whatever, and they can't buy anymore, the fall surface will kind of lift, which will trigger some type of deleveraging event from CTAs, vol control funds, all these things across the board. The right tail chase that we've been getting into kind of fades, and then it goes back to the left tail that's been already kind of on in and of itself. Mm-hmm. Plus the tariff stuff, global market slowdowns, rates are going to stay sticky. That's a big thing that people, I think, aren't really paying attention to. Like, they're calling for 3 cuts this year. I don't know if they can cut unless we get a big dump.
Yeah, they're getting none. You're getting a none zone.
I just don't see it. And everyone, they were calling for one. Yeah, exactly. They've been waiting for this for all year. They've been calling cuts. Cut, and then it gets pushed another month, pushed another month, pushed another month. But they're saying September is when they think the next one is likely, which could be because the window for the McElligot trade and the window for gems starting to come down trade is when they said CTA is overpositioned at 100%. The yellow call buying and the gamma ramp up, is starting to happen in retail names because that's when when retail starts doing that, right? Jay calls it retail froth, right?
Right.
You have all these different, a vol shift. So VVIX rising before VIX, which we're starting to see now, but it has to stick. It has to stick. This happens all the time and it doesn't stick. But they're calling for that timeline for the crash to be in August now. That's what he thinks. He thinks when all that shit that I mentioned happens, it'll be probably in August. And that's when we start to get it down. Now, that down event, if we're at all-time highs, could be a mere 500 points, 750 points. Who the fuck knows? You might not get the Gem Carson 35% down, which is probably unlikely at this point. But anyways,
if I'm not mistaken, he did give himself time out to 26.
Yeah, so the 35% drop,
significant.
35% drop
nine months, 10 months. You got plenty of time for this to all play out.
Exactly. The 35% drop he was calling into through 2026, mid 2026, right? That's when you get capitulation. So anyways, it's just interesting to see that note too. It doesn't make me a doom and gloom person. I'm still going to trade whatever it is. I am positioned still for this thing to drop like a sack of fucking potatoes. But if it doesn't, and I'm wrong, when they're wrong, and everybody's fucking wrong, at least the big boys, that's okay, because I'm finally now seeing it on Twitter, which I know is not a great sentiment gauge, but it has been lately. Everybody is bulled up to the tits making fun of bears. And I'm like, this is what we needed, because previous, nobody was bulled up. No one. That's why we went up. Now I need everybody bulled up. And then I could be like, psych.
They're going to be trapped. Yep.
But what else have you been seeing?
I mean, kind of the same thing, man. You see these probes, and our friend Chris Cady always says it. The Bears are the most inconsistent team on the street, right? They come in, they do their business, they get out of the way. You're seeing it. You're seeing them try to take advantage, and they can't seem to follow through. And so it's kind of hard. Where it's like those guys. Anyone who plays on the short side knows and is clever enough to get in, make their money, and get out. They don't stay short. They tend to not stay short, right? It's not you're not going to be the Michael Berry moment where you're short the whole thing and it blows up and you make $1 billion. Most people don't do that unless they know something. That's what I'm seeing. That's what I notice. You and I both love to play the short side.
Yep.
I'm having a hard time. I'm having a hard time being short and long here. I'm still long, the positions I've been in for the past couple weeks, and really just selling calls against those when I get the chance and scraping that premium. And that's fine.
Right.
It's been all right. And then scalps, I'm taking scalps and not trying to hit a home run here at these levels. I keep in mind too that people go on vacation, right? They bring in the B team. Dude's going to go, if you did well this year, if you actually did make a bunch of money, you're going on vacation. I mean, that's just it. You go to the islands, go to the Caribbean, go to Europe, go enjoy your life because you did well. And that's what I think we start to see. And that's, it's really hard as a day trader to not want to take advantage of that. And Raj said it great today where he was like, hey, don't force a trade. And then I think he left to go play golf. That's the other side of it is, we all want to show up. You want to make your nut for the day. If it's not time, if there's nothing on the table, like it's okay to just hang out.
Yeah, that was a good point from him today. Really good point.
And then I think he did. I'm pretty sure he sailed off and
he went golfing.
Went and played some smack stick. So, which is good. I try to take advantage of that. Like yesterday, I was kind of bored, so I went and went to the record store and bought a bunch of fucking vinyl records.
Yeah.
Came back today.
Yeah, you just don't want to force shit, right? Like, and the thing is, every day the market does give you trades. It does, but you're not going to always see them or be in them, or it might not be in names you're looking at, which we'll get into here in a second. But that's the hard part.
I mean, yeah, dude, your scalper, the NQ scalper pro. I was listening to you guys watching that start to form and didn't take it, and then sat there and was like, "Oh man, that was the trade of the day. That was the trade of the day right there." To be like, "Hey, there's my NQ scalp." Yep, and I did. I caught something early in the morning, so around 9 our time, 9 Central. I caught a nice scalp, and then moved on with my day, and that was kind of that on the personal side. But taking a lot of base hits, dude. I trade my personal account is kind of my the day is kind of boring, nothing to do in the big account. And so I have that to almost be entertained. And I know it probably sounds funny to a lot of people, but I'm batting pretty good in that account. So I'll take it. That's kind of the other side of being here all day is like, yeah, you're going to find those opportunities. You're going to have those like, hey, I'll take a base hit, pay for a nice dinner or two, and then just move on with the day,
Yeah.
But I think we're getting to that point. We're getting to the summer doldrums. Someone said it in the chat earlier, the dog days of summer or the summer of George, where it's like, yeah, dude, you got to be calm here. Don't overtrade it. Don't kill your P&L. If you're up for the year, take that, enjoy that. Wait till we get the catalyst. It's going to push us either way. If we're going to highs with the way that this market is traded, when we get those highs, it continues. You get continuation because then you have the offsides. Then you're going to have hedge fund covering. So I think that's something to keep in mind too. Is if we do get 6150, who's to say we don't see 63?
Of course.
Every time in the past when we would get those highs, and I'd be like, all right, we're at highs. This is time to short. It was time to just continue and ride the wave of the big guys.
Yeah.
And that's the other side.
Yeah, and I think you got a good point because that speaks to the unclenched that I'm talking about. Is like once we get through OPEX and you have the new positioning, there's always going to be some sort of magnet in the other area across all the board, right? And that's what we have to do as traders is just like we're going to trade what we get, we're going to trade what we see. My call is more so just to OPEX, which is not far off from here, right? It's what is it, next week or the week after? So, that's a big piece of this,
right? And let me ask you this. Let's say that they come back and these meetings in London don't go well and no deal with China.
Yeah.
What's the worst that happens? Like genuinely, what's the worst that happens? We get a run back down to another one of these magnets on the downside.
Which would be the JPM collar. So that the downside magnet,
so 5,900
if we
or so?
if we get below 6,000, technically the downside magnet would be more towards the JPM collar. Now that collar rolls off at a different time. Right. So I'm not saying you'll get that pin come OPEX, but there's potential on the downside to get more towards that area and us kind of bounce around as the total gamma strike leading into that particular roll. Because OPEX it's what, next Friday?
Yeah, June 20th. Right? Yeah, June 20th.
Yeah.
So that's what I'm looking at personally is like, do we, not to say in that event, we don't end up with a similar situation to April where you get a handful of 2% down days. And next thing you know, we're 57.50 on the SPX, right? So not to say that couldn't happen.
Sure.
I just think everyone is, from the emotional side of the trading this year, I think everyone's, it's priced in a sense, to be cliche. Everyone knows now. It's like, oh, okay, we get a good deal. We know we're going to get some upside. We get a bad deal. Okay, we're going to go down. But like the conditioning and reconditioning of buy the dip on these events is something that I think a lot of us as traders take for granted, where it's like so many people, they see the good price and they're like, you know what? Fuck it. I'll buy another chunk for my retirement account. I'll buy another chunk of Tesla, you know.
Right. And that's
Take
the
your
big
favorite
point.
name.
So that's the big point. And I'll, to kind of maybe put like a little bit of a button on what we're talking about, right? And I apologize to those listening if I've been a bit disjointed. It was not nearly as prepared as I should have been. This has been a long 4 days for me. But people, everyone needs to understand this is where Wall Street Jesus is the best at this. And he does his live show every Thursday for free on YouTube, on our YouTube account, at Steam Room Trader. So definitely check it out. But he's really good at he doesn't care about all this macro shit like me and Smiddy talk about, cares about what's going to happen in the short term, right? And how to position yourself for that and look at stuff, which is super helpful in these times because it's usually pretty spot on. But I'll say this onto your point of potentially going higher, going lower, whatever it is. What people don't understand most of the time is markets don't typically, and again, I'm not talking black swan. I'm not talking about anything else. I'm just talking about pullbacks, or a crash of what we consider a crash, like that one we had at 4,800, which is more of a headline risk than anything. Markets don't crash when everyone is cautious and sitting in cash. That's just not what happens, right? It crashes when everyone is finally all in. Vol is fucking destroyed. The flow machine, which is all your systemic shit, is maxed out to the tits. Right when you get a macro catalyst, there has supposed to be a catalyst. There's always a catalyst, right? We didn't really have any in some of the other markets that we got, used to in 2024. You get the macro rug pull, and that's the current setup we have for potentially August, right? That everyone's talking about. So, you got to realize that this melt up is forcing exposure, right? Then you have tariffs, which is a big fucking unknown. You got the labor market cracking, right? Which Kelly Bett's been talking about. You've been talking about it for 6 months now, right? That's been something you've been watching a lot of. Earnings. People aren't given not guidance anymore, right? For the upcoming years, right? Which is, that's usually a sign that no one's paying attention to, which doesn't matter because we just keep going higher, which again, systemic, mechanical flow. And no one's hedged up. There's no liquidity, right? That's what you have to get usually for these bigger events to come. No one's really hedged. And again, you can still have some, but you get my point. Everyone's maxed out on the long side. Everybody's in, bulled up. Let's go. Macro hits. We come down. And then there's no liquidity and it's just exit. People are just exiting. They're getting the fuck out. That's when shit blows up. In my opinion. You could disagree, but that's typically what happens.
No, I mean, that is the rotation. And then they go, by that point, a lot of people have gone into small caps and they're chasing, trying to find that next little name that's going to pop on the strength. It's really hard in those moments to go buy your quality names, right? Things like Microsoft. Microsoft is pretty much teetering all-time highs. I think it pulled back a little bit.
Yeah, Kelly had a good short on that today.
Yeah, how do you go buy Microsoft right now? That seems insane. So you go look for the next best thing. Oh, okay, well, I'm going to go buy something else in the space. Okay, go buy Dell. See how that goes. And then you roll down from there and say, all right, well, now I'm going to buy an Intel, right? Oh, Intel got a great deal today. Next thing you know, you're in, and Intel's not a small company, but you get the point where it's eventually you end up in this pickle where you're buying these little companies. And when that crash happens, good luck. Good luck getting out because you're going to be riding the elevator down with everybody else who chased. And I think I'm very much with you where it's I don't feel like we're in that place right now. And as bad as I think macro looks, it almost doesn't fucking matter. There's been so many times since I started trading that the macro doesn't matter.
The macro hasn't looked good in 10 years. So
exactly, dude. And we just continue going up.
No one cares. Egg prices are $10. Housing's maxed out. Yep. People are getting mortgages at 7%. I got people on LinkedIn, dude, who haven't found a job in over a year. I have people that are a year and a half without jobs working at the local Home Depot. Right. But YOLO, fuck it. Who gives a shit? I'm willing to Chipotle. Dude, okay, you know what? I have to say this. Got Jersey Mike's when I wasn't feeling well on Saturday, right? Because usually my Jersey, usually if I can get through a soup and all that stuff and I want to eat something that's I'll consider fresher than crap. And I don't feel like cooking, I'll just get Jersey Mike's. And I usually get the giant and I have half now and then I'll save the rest for another day. Do you know how much it cost me to fucking get a Jersey Mike's giant subs delivered DoorDash with the Dash Pass?
$26.
Fucking more than it was like $35 for the sub sandwich by itself was like $24. And
What?
that's when I go, we are cooked if I'm paying for lunch meat on
Damn.
bread, $24 for a
It's
sub sandwich.
bad. Damn.
Chipotle is the same way. I got a burrito with double
Yeah.
meat the one day, and I don't get Chipotle in that much anymore. For my first time in Chipotle in years, after like living off of it when the bowls were $6. Get $22 burrito. I can go to my local Mexican restaurant. I can get myself a burrito the size of my fucking head for fucking $12, $13.
Right.
Like, but that's the whole point of what you're kind of making. Like, it's just nuts. So that is, I think, a perfect segue to what we were kind of talking about of what have we been doing, right? Like you were talking about, we missed some of the stuff. Like, what have we been doing? But we've had some good trades. We've had some good trades.
Oh, yeah.
So let's chop it up a little bit on what you've been doing, and I'll talk about what I've been doing and what I'm doing now.
Sorry, I was pulling up this spreadsheet. So I actually, for the past couple of weeks, I've been kind of keeping a new spreadsheet just to track the premium that I'm selling against some of these long-term plays. So still holding United Health and Moderna, 50,000 and 100,000 shares respectively. United Health is in a wacky range here, dude. It can't seem to, every time we break above 305, 306, we just get these sellers who come back in and hammer it. So I'm taking advantage because the premium on the options is pretty juicy. So for the past few weeks, just selling against that, scraping that premium. Yeah, I mean, you have to. Other than that, dude, I had some nice hits in Rocket Lab. Caught that.
Yeah, that was a great trade. Great trade.
Yeah, sub 27, and then what was that? Yesterday, caught it at 28.50 and got out for a buck and change on 10,000 shares. So that was good. And then hit a nice small cap uranium miner that I found, kind of skimming through some bullshit on the internet. But that ended up being a big hit, and I took the money and ran. And that was kind of where I'm at. Other than that, nothing crazy outside of little scalps in NASDAQ, which I'm doing on my personal side. And that's just for, like I said, for fun and,
for funsies.
Around money. Exactly.
So a recap of what I did, and then we could kind of talk about what you're looking at. So we called out, you and I together, probably a month and a half ago, that we liked uranium, right? That was one of the calls we had. We liked uranium. That position has worked fucking wonders. So I played URA, right? I've been in that now for a while. I covered my stock position in it, and I bought calls instead, just to kind of continue exposure. Ended up taking a double on the calls, rolled them up higher. Then ended up, I'm still in those now. It broke my strike that I had of 35, and I, maybe probably should take a profit, but these were dirt cheap, like lotto calls, right? So I was just I'm gonna make another 50 cents. Like, who fucking cares? But that was a monster call that we had. That was, great for anybody that kind of tailed that or played along with us. Like this chart is disgusting now for uranium. We got it near the bottom, which was huge. But I got to talk about Nebius. Nebius. This piece of shit, beautiful piece of shit, is one of the most ridiculous things that I've ever traded. So I've been playing NBIS now since the price was about $22, $23. I sold it at like 33 in the equity, and then I bought January, what I would call lotto calls, because I bought the 50 strikes. So I'm like, yeah, whatever. I made $10 on those suckers on this last pop. So I sold those and then bought true lotto. So I was in January. So I was like, I'm not playing January anymore. I was like, this thing's going to run out of steam at some point. But I also I want to keep riding it. Like, the pop on this thing was disgusting. We went from, that one low where I thought this was done, it was 34.55, up to $52 or high of $55, right when I was covering most of it, and then buying the lotto tickets. So I'm in like lotto, I think July 70s now, that I'm just like, yeah, there's probably not going to hit, but they were cheap. These were cheap. I also didn't expect to have to roll these, which is always a good thing, or take profit or do anything with them until way closer to January. That's why I bought Jans.
Right.
This is usually a really slow moving company. It's not fast, but the pop was just stupid, right? And this is one of those things where this is a J play, right? And I got to give credit to the people that pointed out to me, which is my co-host right here, Smiddy, who pointed out this name and we were watching it for a while. GJT was pointing it out for a while in the room, which got me interested. I'm like, okay, it's consolidating. I'll take a flyer on this. I'll just buy equity. That way I have time, right, to do what I want with it. And if I have to hold and sit in it, who really cares? And it was just a monster trade. So shout out GJT, shout out Smiddy. That was incredible. I dabbled in some other stuff like CSX. That one's been catching some names. I've been in that for a little while now. I have the 35s for Jan. They were cheap. They were $1. I think they were up double at one point today, but
nice.
We still needs more time. And then, of course, because we talk about what's winning, we have to talk about what is losing. I took a nice bath on my CoreWeave lotto puts. Again, they were lottos, but I'm still going to call them out. They're losers right now. I have them for August, so is what it is. I took a loser on my Uber short. I was playing the whole Tesla robo-taxi thing, so I got hosed on those. I lost like a
buck. Be started on that shit.
Yeah.
Good
it was good. It looked good until it didn't. I didn't get stopped out like I thought it would. Then we had a nice pull below, and I'm like, oh, I'm going to finally get paid. And that was the biggest fucking head fake of all time. Shout out Trump and Elon for having their Twitter spat. Fucking jabronis. So that was a loser. Yeah, loser. And I'm underwater in some of these VIX call spreads that I bought. So, again, one was a hedge for the longer portfolio, which I don't care about. And then the other was an actual trade, which is just going to be a loser. That's okay. Unless we get this miraculous thing in August, like then they're right on the timing, then I might be able to get out of them. I probably won't make any money on them. They're just too far out of the money now, and you know how VIX is. So that's what we're doing.
And to be fair, I scalped Rocket Lab today and got hit on that for about 20,000. So I had I took 20,000 long, kind of on the initial dip, because for the past few days had been working where they sell it at the open, and then if you bought it well, you were just riding the rocket to the upside. But did get paid today, so when I hit $1 on the downside, I went ahead and clipped the 20,000. Which the irony is, of course, on the winning trades, if I had scaled in and done the 20,000 long, I was only doing 10,000. It would have, those would have paid me much, much better. But still positive for the week. But it was a big loser today. That was like the big losing trade that I had for the day. So just, as you were saying, fair enough to note that for everybody. Everything was the winner.
Nothing's ever a winner. And to your thing, like, what we've been doing really well, though, is playing the indexes. So I know Ronch did too. And I did it live on the broadcast that one day. But we've had some monster scalp days playing the indexes, right? When we do get these volatility events, we've been hitting the reversions or playing the momentum. That's what we do every day, mostly. When I get shitty days like yesterday where there's nothing to do, and even today was dead until we got the headline, and then we bottom ticked that sucker. That was another monster play. I didn't hold it the whole time, right? I went and fucked off because this market's way too slow for those types of trades. But we've done. I've got to give credit where credit's due. We are doing really well, on the index scalping, which has been fun. It's been fun to do it even on the live broadcast from time to time when we actually get a play at the end of day, which does not happen often. But we saw. I had lotto calls go from $1.10. I took them off at $4, $6, and then it ran to $10 all at the end of the day. Fucking dumb. But anyways, I feel like I'm being like an egotistical asshole, but I'm just being honest. It's just what it is, and I will call out the losers. Of what we're doing. And then the other thing that I did today, because of what's going on, and Ronch will probably slap me for some of this, but I don't really care. Playing with some profits. I started playing more condors with some of these names, given what's going on. Like, we're in this positive pocket. So I am playing for next week UNH condor, short condor. So I'm just selling for premium or looking for a breakout. and Apple, which I've never done this with Apple, but Apple's kind of stuck in a tighter range now. So I was like, I'll dabble with this and see what happens. I can make like $2 here. So it's, and the Ranch is words of wisdom, going towards OPEX. I mean, I'll close these off at a 50% profit on each leg if I get there.
Right.
But I like the chart for it. It's usually a good chart. And then UNH is, my entire play on UNH, like you, is I'm actually hoping it breaks the upside so I can double down and morph this Condor Ranchero style and catch this upside, because this thing is a royal piece of shit.
Yeah. Oh, it's been killing me, man. We're probably a little oversized on this, but I'm with you. I said that to Brahmable today. I said, hey, dude, like, this is probably the Condor. Like, this is definitely not the buy calls for the week and hope that it goes up, which I think maybe there's a few people playing, but it's tough, man. I think it's going to take a little bit more time for this to settle out. And, unfortunately, I've got a pretty big chunk of my book just on we're going to ride this out. When it does break to the upside, which I think that it
should be pretty fat if it breaks.
Right.
Because people are going to chase into this shit looking for a CrowdStrike type move.
Right. And that's my client's whole thesis is he thinks it's, going back to 400 plus. And that's why I'm selling the calls against it, because on a weekly basis, you got good premium there and I'm going to take it. So I go out of the money when I do that too. I go pretty
same.
We've got 50,000 shares. So I go out usually, $20 past our strike. So I think I was selling 317 and a half, 320s. Okay. And that way it's like, if we were, let's say on a Monday I sell those, and I didn't this week, but let's say on a Monday you sell those, and by Friday or Saturday morning, technically you're getting called the shares like, you made $1 million plus this premium scrape. I'll buy it back the following Monday and be happy. But yeah, that's kind of my thought there. So doing what I can, but this is definitely a little bit long term. It's just big. It's a pretty big position to be holding long term. I wish that we had, left a little bit of meat on the table to buy something like Tesla on the dip. And I did want to talk about that and the whole robo-taxis. They're starting to roll those out here in Austin. So I'm super skeptical, man. They up until the weekend did not have any filings. The city, was pretty much in the dark. And sure enough, I see a video earlier today. I told everyone I'd keep them updated. I see a video today of them on South Congress here in Austin cruising around. So they do have them running. I think it's a pretty, it is a good marketing tactic to have them running on that road. It's a very busy road with a lot of erratic traffic and a lot of people. We have a lot of foot traffic. I think it's pretty, it's a dicey decision, right? Like, do you want marketing? Do you want to put the billboard in front of people, or are you okay with the billboard falling on someone? Because I think that's where we're at. And as a knucklehead, I drive that road 3 times a week plus, right? There's always random shit that happens. And it feels like if they don't have that technology dialed in, we're going to have an incident. The day there's an incident, whether it's a car crash, a little fender bender, or it's somebody gets bumped, watch out. I think that would be bad news for the stock. I could be wrong, but, pretty interesting where they decided to do the geofence launch. So I thought they were going to pick a different part of town that would be a little quieter. This is not it. This is not a quiet part of town. This is the busy, busy part of town. So we'll see, man. It'll be interesting. I'm not a big Tesla bull, but I won't trade it short. So I will not.
It's so hard to short that thing. That's
Tesla.
You can't short Tesla just like I can't yet short Carvana. I want to short Carvana with every dollar I own, and I can't.
Yeah, well, again, another business that I mean, they've got to be cooking the books. There's no fucking way.
They are cooking the fucking books.
I know guys who run car dealerships. I'm good friends with the guys at Porsche up here. Like, I know what the margins are on fucking buying and selling cars, and Carvana is about as
Dude,
close to a Ponzi scheme as you can get to FTX.
I need to show this shit. I have to show this. Look at this
Hit me with
fucking
it.
piece of shit. Look at this. $4 in January. Look at this shit. December of 2022. Even if you wanted to go back to here, May of 2023. For those that are not watching and are listening, I'm showing just a Carvana daily chart right now. If you go back just 2 years ago, we're trading at fucking like $8, and the lowest it was like $3. Look at this. What is this? To 400 or not 400, 350 peak recently.
Oh,
this
man.
is the most ridiculous chart ever. The company was about to go under, and now magically they have all this cat. I don't fucking think so. This was one of the last short reports done by the Hindenburg guys. I fucking hate it. Anyways, go ahead, keep going. This is such a
why didn't I buy a million shares of that at $8?
Because you're not
retired.
Stupid. That's why.
I'd be retired on my island, Joe. What the fuck, dude? Oh, you gotta love it. You gotta love the irrationality of this market, though, and I think that's where we're at. I mean, and we hit on it, a couple weeks ago with Jay. It's the whole the meme coin phase, the OnlyFans shit. It's people have lost their grasp of reality.
OnlyFans. Holy.
I mean, dude, it's
what a business. If I could invest in that shit, I would. Holy crap.
Right. I mean, but look at the models, right? Look at what we're doing as a society. I think that there's, it's a bigger, like, esoteric question and statement of like, look at what's happening.
Yeah.
I think that those of us who apply reason and logic a lot of the time and fundamentals and like, dude, you can do all of the analysis that you want, and and then you get musked and you got a meme, and next thing you know, his stock is trading at what's the multiple on this thing? Are they even making money? Yeah, it's a PE of 169. It's
that's normal.
From what I see, yeah, that's very normal. $1 trillion company. As we were seeing sweeps come in today at 700 per. So there's some knuckleheads out there who rolled tens and tens of millions of dollars of options. Either they rolled or bought. We'll see tomorrow if they were opening. For this thing to double, I just, again, it defies all reason in my mind. But hey, I'll be wrong, and I'll be the first one to call it out and laugh and be like, well.
Hey, that's one thing we are good at, Smiddy. We have no problem telling people we are wrong or that we lost money. I mean,
bingo.
That's the game. I don't like people that sit here. Like, if we go on heaters, we're gonna tell you we're on heat. I'm on a heater right now. That's just what I'm gonna tell you. I am on one. I will, but I went through a very cold spell, as Smitty can tell you, last year. So, that's the game, though. You ride those ebbs and flows, and you hope
I'm
that
right 3 times in a row. I get to I told you so asset, and because I fucking told you so. No,
I am a god.
Yeah, dude. For those listening, there's some backstory drama to that, but we'll digress on that fucking note.
You got anything before we dive into Trader Fade? You got anything else you wanted to?
The best section of the entire show. This is what people pay for when
this is what. Yeah, I mean, again, this is my own fault. I was a bit disjointed and all of this, but we're just shooting this shit, having fun. Who fucking cares? Yeah. Is there anything else you want to talk about?
No, man. On an unrelated note, I was listening to one of the Joe Rogan podcasts recently, and he had some crazy guy on. They mentioned a book I'd heard a million times called something, Behold the Pale Horse or something like that. Short book. But yeah, Behold the Pale Horse by William Cooper. Very interesting, very fascinating. If you're a bit like, a bit of the conspiracy type, or just question, kind of the reality of our existence. Very fascinating listen, for sure. So I would recommend that if anyone out there listening wants something. It was like 2.5 hours or so to listen to it. But it's, dude, had me very intrigued. Like, every once in a while you get I listen to a lot of trading books, right? So, you throw those on, you learn the lessons, whatever. This has been something where I'm like, oh, I got to go listen to more of that shit. Like, no podcast, fucking, I'm going to go listen to this. So I would recommend that to people who kind of have that, inquisitive brain and question what goes on at high levels.
Love it.
It's eye opening for sure. So check that out if you're bored. But yeah, other than that, let's get into the best section of the podcast.
It's trade.
Yeah.
Or fade. So a couple things with this. One, I'm a herb, and I started cleaning out my desk, and I haven't put the shit into a spreadsheet yet. So we are gonna call this like what we've been doing on this, like the dry run to see how it went and all of that. So we're gonna, after we give our results from last week with Jay, it's a clean slate. We're gonna start 0-0 across the board, and I'm gonna start tracking these. It wasn't pretty for Smiddy for a while, and now I think I'm the one that's been on the losing streak. But I'm gonna share a screen, but also call this out. Yeah. So, last when we did this with Jay, we had this fucking brilliant thing, Core Weave, and we had 90 puts for 530. So that means that I would have had to get down to here 90 sometime. And yeah, did it? It did not. Didn't even come close. Look at this fucking piece of shit. Jay faded the puts. Smiddy faded the puts. I gave them both a middle finger for the memes and traded it. And I actually did trade lottos. So I lost not only on this, but on my P&L. But that's what you don't do. You don't short, shit like this that early, I guess. Live and learn. So that was a big loss. Smiddy with a dub. Oh, wait, no. I missed the arrows. We all fucked that up. Holy shit. All three of us traded this.
I think we all would have faded that.
Yeah, we all said we're going to fade
that shit.
Yeah, Jay faded. So even though Jay, that was just the funny one. I can't read my own handwriting. That is embarrassing. I got to come up with a better way of doing this. So yes, it was the 90 puts. We all traded it and we all lost. It was the MSTRs where I did the contrarian. So MSTR, we had the 380 puts for 530. So needed to crack 380. And boy, did we. Boy, did we crack 380. Mine was off of needing a breather in BTC. So this is the one where Jay and Smiddy both said they wouldn't have taken it. So they expected MSTR to keep going up. I said, fuck you to them. And I traded it and I would have won. So that was a dub on the MSTR. And then we did App 11 APP. Was the 380 calls. And we all faded this. And we all lost. Look at this fucking chart, too. It's just a monster.
My track record in this game is
we honestly, if we made an inverse, we would make some money. So Smiddy went 0 for 3
again. This is
it's okay. Jay also went 0 for 3. And I went 1 for 2.
That's a little consolation prize. I'll take that. Good company. So, good company.
That is good company. So we are going to do a little swippity swappity here too. Every other week, me and Smiddy are going to actually swap who's going to host this and come up with the lines. So this week, as we're starting fresh, Smiddy is going to call out the names. I don't know what they are. And I'll keep track of what they are. I'm going to put them in a spreadsheet. We're going to keep track as of now and take it away, Mr. Smiddy.
All right. A couple that I think that you're going to like that we're going to touch on that we've already touched on. So the first one, and these were, I just went through our sweet board today and kind of picked out some names because we're not Banana Man won't let us see his calls without paying him. And we're not going to pay that son of a bitch. So
facts.
Here's what I pulled off our board. So the first one is, Joe, you'll love this. The 613 NBIS 58 calls.
Oh, we're playing NBIS, and what are they?
Yep. They're the 58 calls for this week. So somebody betting this week on 100 grand.
So for June
13s.
June 13th, Nebius, NBIS. This is for me. So this is a name I know really well. They want 58s.
Yeah, 58s. There's 100 grand. So it was a pretty big sweep for that name.
They want us to go back up here. I mean, I am in 70s for July. You know what? As much as I think they're going to give this a breather, there's always the potential for a pop, and it did have a strong finish. I will. Oh, fuck. For this week? Those are definitely rolls, but fuck it. I'm trading it. I'll take it. I'm going to take it just because this name has made me a good amount of money this year. I am going to trade this.
I like it. I like it.
What are you doing?
I'm going to fade it just because of the move that it's had, but I will not be surprised one bit if it gaps up and hits that thing and has another 10% day, and we're all going to be dumbfounded. And,
I mean, I'll shit myself if I get paid on these lotto tickets that are up there at 70 in the next month and a half. So
listen, I want to see you get paid. So, but I am going to fade it just for this call, just because it's short dated. I think if it was out to 620, a little more faith that would happen. But I wanted to make sure I picked some names that would be inside of our date before the next recording.
Right here.
So
okay, you're what's the next name then?
All right, next one, a little revisit here. CoreWeave.
Oh fuck.
This week. Yep, and this was a good one. Actually, I'm gonna go out to the next one. I'm gonna go. No, that was a block, so fuck that one. So all right, CoreWeave 613s, 140 puts. And they hit it for
so we got 140 puts. For what's the expo?
This Friday.
So again, June 13th, CoreWeave. What are you doing?
I'm gonna trade it. This thing's got to cool off. There's no fucking way.
140s are here.
It's not a crazy move, to be honest.
Yeah. Fuck, I agree with you. I actually don't think this is that far off, and we'll probably get this in one day. And the way that we do this is it just has to get below the strike at one point.
Right. But it was a $550,000 sweep, so I figured that was pretty good size. Somebody's either needs some nice protection or really wants to see that thing fall apart.
Damn dog. So we're both trading this bad boy.
Yep. I would take it.
What's the last one?
And our final and last call is going to be PLTR. These are for 620. Yep.
So this is OPEX.
This is going to be the 135 call, and they swept him for 363,000.
Really have to put me in the position to trade two pieces of shit.
Yep. That's what
these are the 135s.
Yep. So this will be pretty much a crack of all-time highs. But if we get there, this thing's going right to 140. And that's why I think it's interesting, because I believe that if they break, look at that. I mean, look at the chart. If that thing breaks, it's going to 140 that day. And they've got what, 10 days?
It's a new start too. Yeah, I'm going to trade it.
Yep. Me too. And I honestly might hit that in the comments tomorrow and hold those for a few days.
No. Yeah, I'll trade it. Only because it's not that far off. It just has to crack it. You know? Right. You're making the assumption that we'd get that at whatever price those sweeps came in. So,
yep.
Okay. Of course, you pick names of these fucking jabronis.
Yep. I had to, man. I went through the list. I had to find some good things. So we'll see what happens. But yes, on that bombshell, I'm going to be out Thursday, Friday, all day. So if you can keep UNH bid for me, that would be much appreciated.
Listen, I am short the 315s or the 315s.
Yeah.
So I am all for that breaking. Like that's the play. I think if we can break that and it can hold, you get the upside. So I'll be pulling for you while you're out taking your test. And
this is just a crash. This is crash course. I think test next week.
Oh, crash course.
Gotcha. Yeah, and then the following week, I think we will need to reschedule recording because I will be out on an island.
Ooh, what day are you gonna? What day do you leave?
The 22nd.
Okay. So well, I know what I am gonna do. Actually, I might be having to bring in a co-host,
special guest,
not named Smiddy.
Bingo! Do it, dude.
That'll be fun.
Might need to tap Brahma Bowl.
Yeah, that'd be great. Brahma.
That'd be a good one.
I think he'd like to come on here and shoot the shit with me. Oh, that'd be fun. Yeah, we'll figure it out. Madonna wants me to pay him to come on the podcast. I'm like, yeah,
of course he does. How much does he want? I might pay.
It's probably $9.99. Yeah, probably $999 is probably the fucking name. Like, buddy, relax. Relax. I love you, Madonna the Destroyer. But I mean,
we gotta get him on. We gotta get him on one of the streams here soon. So if we do that, well, I'll be out. So unless we do a stream tomorrow, maybe we should.
We should do a stream tomorrow. We'll probably do a live stream. We do need some live streams. We haven't done one in this week yet, so we got to catch up with that. But this was fun. I feel like
it's good. A little sporadic, but fun. We're catching back.
Yeah, sporadic. It was
nice.
The problem is every time we get in the groove. Every time we get into a fucking groove, it just goes, we end up having like a week off or this and that. But I think a lot of this too is, given the rough 4 days that I have, I was like, fuck, I am just not as nearly. I mean, I know what I want to talk about and I have a good feeling about what I want to talk about. I was like, but I didn't have like my notes in front of me ready to go. And I blame this on Verizon. So I got a story that we're going to end this with. So today I had to go get a new phone because they're offering this deal and I have an iPhone 12 Pro Max, right? And I'll be honest, I am not a Mac guy. I think Mac OS is like the worst thing on planet Earth. And I will say that to him blue in the face. I get so much shit for that from Charlie, Norse, you, fucking Ranch, all you fucking herbs that trade off Macs are just dumb. You're just dumb. And I don't care.
Through a Microsoft.
Yeah.
I execute through a Microsoft.
Yeah, sure you do. So anyways, I have a Pro Max, 12. I've had it for like 4 years, been paid off. I'm like, it does all the basics that I need to, right? Phone calls, text, apps, whatever. I don't need all the shit that I get into, that Android offers, which is way better. I like my blue chats. I'm just gonna be honest. I'm a simple person. So anyways, they're offering like this deal, $1,000 off the Pro Max, which is like a $1,300 phone or some shit. So I go to the place, I'm with my mom because she needs an update too. And our whole family's been on the same plan. It's cheaper that way, right? So I just pay her and be like, here, whatever. So we go there and the guy's like, oh, well, that promo's no longer a thing. Like, when did it end? He goes like May 28th. It was like a loyalty program. I'm like, oh, he goes, but better yet, we have a promo right now where we could just give you the phone for free, basically. Like, and I don't have to trade my phone in. I'm like, whoa, well, that's fucking spectacular. Tell me more about that. I want to know about this deal. And then he looks up our plan and he goes, oh, you guys are on a much like older plan. I'm like, oh, he goes, so yeah, you guys pay like $44.50 a line right now. Because this would jump you up to $85 a line for 4 people. He goes, that's not going to be worth what you're going to get over the next 3 years that you're locked in on the phone. And they're like, oh, there's nothing you can do. He's like, no, sorry. Blah, blah. You can call corporate, but they probably won't be able to do anything either. So I'm like, okay. So we walk out. My mom's like, oh, I'm going to call anyway. I said, sure. We call, right? Long story short, this lady goes, okay, yeah, you could get that phone, like the guy said, but he's wrong on the price. And we're like, well, what is it? She goes, it's $45. I go, wait, we're paying $44.50 right now. She goes, for an extra 50 cents a month, we will give you two iPhone Pro Maxes for you and your mom's line. I go, you're joking, right? She goes, no, dead serious. She goes, do you have to turn your other old phones back in? She goes, but yeah, and it's not $1,000, and it's not free. I misspoke. It's like, we'll give you like $900 off the phone. And I'm like, for 50 cents extra? Fuck yeah. That's a no-brainer. I'm getting a Pro Max for basically like, she's getting her phone for free because she didn't need a Pro Max. I'm getting mine for basically $300. I'm like, sign me the fuck up. But it took forever. Like, we had a call, then you had to go somewhere to pick it up, and then that phone was in a safe. So they had to wait for someone who's got the key or the code to get into the fucking safe. And I'm just like, I didn't have any time to come on here and prep. So that's my excuse. I'm sticking with it.
It's perfect.
I don't care.
Dude, that shit always takes forever. It's kind of comical how long it takes when you're like, yep, I just need to swap this thing out. Dude, I'm a knucklehead. I buy them and then I buy the new one. And Then I have a bunch of phones and laptops and
You
shit.
should just ball one off of you. What the fuck
Yeah.
am I doing?
You know my whole setup. I've got stupid crypto wallets hidden on everything and bullshit.
Yeah, that's what I want. I want you to give me the
Yeah.
wrong phone that's got your
Yes.
secret keys, and
I'm
cleaning out your crypto wallet.
Oh
Find
man,
30
I
Bitcoin that
love
you
it.
said got liquidated, but you really didn't know what you were doing, right?
You're gonna go buy a Porsche in a fucking house somewhere in the woods.
I'm gonna go buy your house. That's what I'm gonna do. Be like, hey, by the way, I'm gonna offer you way above value just to buy your house out after you gave me the 30 Bitcoin.
You know what?
I'll
I'd
rent
move
it
down to
back to
Puerto
you.
Rico and fucking hang out
Yeah,
with Lucci at Trade Space. How about that?
for sure. That'd
That'd be the
sick.
next move. You just got to
That'd be
help me
sick.
convince the wife. I
Oh,
love it,
all
dude.
righty.
I love it.
This is a great stopping point. Thank you everybody for listening. We will be back this time, not with Smitty, the next time I do this probably. So, Smitty, enjoy your vacation. I know we'll be talking long before you leave, but enjoy it. It'll be, you're going to have a good time with Maddie. And then, we will be back in 2 weeks, and I'll figure out who's going to come hang out with me, talk a little bit about what's going on. We'll be around OPEX. That'll be fun. Talk about what's kind of going on. That's when I get to nerd out even more on some gamma, and I will be much more prepared for that conversation.
Lock it in, Joe. Lock it in.
Yeah, I know. It's so bad. It's so embarrassing. But yeah, just so everyone knows, Theme Room Trading is doing an education sale right now. You can save over 30% with code SAVE250 on all of our courses. It comes with 1 month free of the Steam Room as well. So you can hang out with me, Smiddy, Ranch, Jay, Lucci, and everybody else, and all of the knowledge that the community has, which is honestly the most important part of all of this, and catch some of these cool trades that we've been doing and, chat with us and pick our brains. And more importantly, people in the community that some are way smarter than I will ever be. And I am well aware of that. So check it out, steamroomtrading.com. Use code SAVE250, and we'll catch you on the next one. Peace.
Take care, folks.